Hi everyone, welcome back to Be Rich. It's me, Vinod, and Happy New Year and welcome to 2025. As I've been talking about it in this lead up to this video for quite a few weeks on our channel about 247. Some of you who just joined us must be wondering, what is this 247? Well, 247 is the idea that investment is about consistency and it's about habit and it's about putting small amounts of money in the market in incremental values over a long period of time. So to test that concept and to also build that habit of investing, this year I've felt that we should start a challenge in our own group, in our community, of saying the markets are open 247 days this year. If you take away all the holidays, and out of those 247 days, I want you to spend an hour in the market buying in different coffee ranges, and that constitutes about around 3%. That was what I spoke about. So today is the first day of this. I had gone to the market. I was considering Natco today. So I don't know what is there on your list, but I do hope you manage to step into the market and buy something. As I am aware and you're aware, this video comes out in the evening and the day is already done. So I'm assuming that you managed to do something today, though you're recovering from all the fun you had last night and all the parties you've been doing. So if you did miss this opportunity, it's not too late. You can do it again tomorrow. There's nothing like if you missed one day, it's the end of the journey. It's not. It's about at least being 80 to 70% consistent throughout the year. So even those 247 days you miss and you're only consistent for 80% of that time, I would still say it's a huge win. So keep that in mind as we progress further into this 247 days. It is not about hitting every single day. That would be amazing if you do. But it's about trying to hit at least 80 to 70%. We aim for 100, so at least we land at 80. Even I'm going to have days in this 247 days where I might miss because I'm not in a situation where I can invest, or I might be in a position where I'm not able to invest, which is quite normal. All of us go through this. Life constantly keeps happening, though we make our best plans. To help you motivate yourself to invest in, some of you use your phone with trackers and all this. I prefer going old school. You can take one of these calendars like this and cross out dates on it, right? So people can see this right now. So I'm sure your office gives you one, or I'm sure you're able to get your hands on one. Keep it on your desk near the place where you log on to invest. And on the day when you do invest, cross it out, and then it motivates you. So every time you see that calendar, you know that you have done investing for that day and you feel good about yourself, and it motivates you to move forward. If you are a little bit more like me, then you can probably get a journal and you can start something simple as that, where you put down the month and what you did for today. I've written I bought some Natco today. Whatever you do. As I populate my journal on a daily basis, I'll keep sharing it with you. I'll share it more frequently on my Instagram group, which is there, the 52-week challenge group, because I'm more active there and it makes sense. Because most of the conversations there happens during pre-market opening. That means early in the morning, we start at 5 a.m. and you keep having conversations till, markets open and I finish doing my tiffin coffee for the day. Then I wish you guys the best over there. And some of you managed to have a conversation with me, which is great, which I do enjoy. And if you're interested, you can find it on my Instagram handle, which is Vinod Srinivasan with a blue tick. And under my profile, you can see the 52-week challenge. You click on that and you can join the group. It's not a must that you must join. It is just something optional. And the reason why I'm asking you to come and join that is I had a brilliant suggestion given there by someone like Dana, who's a Gen Z who doesn't have much tiffin coffee range. And he said that he's looking at investing at ETFs instead of buying individual shares because his budget is much smaller than mine. I'm looking at putting at least 2,000 rupees into the market every day. His budget is much smaller, which I can understand, but he wants to be consistent. And at the same time, he wants to make sure he covers his bases. So that got me thinking, and I'll ask Rupesh to share the screenshots of these on the screen. We have the ITBs, which is the ETF for the IT sector. In the last 5 years, if we've been investing and sipping in that, today it's trading at 46 rupees a unit. It's gone up almost 200%. It started way back in 2000. A unit was around 15 rupees. Now it's at 46, so it's up almost 200%. And if you look at Pharma Bees from Nippon, that is it's gone through a cycle of going up and down. but that is up 65% over the last 5 years. And if you see the gold Bs, that is up almost 81% over the last 5 years. So even if you're not able to invest colossal amount of money, all you're able to put is, let's say, 200 rupees a day, and you split it amongst these 3 Bs, will do great. If you can go a little bit more, then I suggest you also do the Nifty Bs. The Nifty Bs is right now trading at 263, and that will give you exposure to all the sectors in the Nifty index, and that gives you a return of, for the last 5 years, of almost 101%. So that's what I'm trying to say. It doesn't have to be that you have to consider stocks. It will be amazing if you can squeeze that out of your budget. But I do understand not everyone can afford to squeeze so much out of their budget on a daily basis whenever the markets are open for 247 days. So it can be a buffer for you. On a day you're not able to do, like for me, I'm not able to do my 2000 rupees that day. I can buy some gold Bs that is, or I can buy some pharma, ITBs, and I can look at that, and that is a great strategy to have. So keep that in mind. There are options in the market available for you to invest in. So don't use that as an excuse for not investing. I'm sure most of us can at least squeeze out 100 to 200 rupees a day and invest, right? So I want you to try and invest. Don't look for excuses and don't say things, don't get into a negative mindset. I try and have mindset conversations also in our group and encourage you to get you into the mindset of investing and to give you positive feedback and encouragement into investing. Because the key thing in investing and creating wealth, especially the likes of Warren Buffett, is being consistent and being deliberate and doing it in small quantities. We're not trying to put lakhs and lakhs of rupees in the market in a month or in a day. All we're trying to do is put a little bit of Tiffin coffee money into the market and hold our horses and keep doing it consistently, repeatedly. And that is how compounding is done. Compounding, if you know the story, the famous story, if you don't know it, go search it. I'm sure there's a Wikipedia page about it or a Google page about it. And you'll understand how simple compounding is, of just doubling over a long period of time. That said, some of you are from our Muslim community and you've always been asking me what to do if we are a Muslim and we don't want to invest, but we want to invest in the stock market, but we don't have options and opportunities. For you being part of our community and you're finding it hard to pick on the stocks we are recommending to you, you always have Sharia Bs. Sharia Bs are another Nippon ETF fund which consists of companies which are compliant to the Sharia laws, and that could be something you can look at to invest in. If you have little more funds, more than the Sharia units, and you're willing to put in a lot more in a monthly basis, there are companies which are there in that ETF you can directly look at, which is TCS, Hindustan Unilever, HCL, Sun Pharma, Trent, Ultratech Cement, Asian Paints, Tech Mahindra, ONGC, and Coal India. Those are the companies which are constituting into the Sharia index. But my personal thing is, Hindustan Lever is expensive, HCL, Sun Pharma, Trent, all of them are very expensive. So if you are keen on looking at these individually, do look at buying at value propositions. Otherwise, my other strategy would be look at these companies and see basically are these companies doing, which businesses are they in, and find similar companies like them which are in the same sector, at least doing similar kind of services, where you can see value and look at buying. For example, if you're looking at TCS, maybe you can look at the IT sector. If you're looking at Hindustan Unilever, you can look at the FMCG sector. And healthcare, you can look at other pharmaceutical companies which are at value. If you don't know how to do all that and you still want to be invested, then the Sharia Bs can be something you can look at. Even the Sharia Bs over the last 5 years has compounded and it's grown at 109%. So Rupesh should put all these screenshots in the screen, I'm sure, for you to understand and review and look into. So today is the first day. I do hope you looked at some opportunities in the market. If not, tomorrow is another day and get after it again. Like I said, if you don't have funds to look at individual stocks, or you don't have time or the inclination to look at individual stocks, you can always look at ETFs. If you don't even want to look sectorial ETFs, you can just look at the Nifty and ETF and buy that. I suggest that you keep buying some gold also and not just buy different ETFs, because gold is important. Some of you did ask how much gold should you have part of your portfolio. In the current situation, I would at least have 20% of my portfolio in gold. That will hedge against inflation and other things which might happen this coming year or the next year, 2026 that is. So Having 20% of your portfolio exposure in gold is a good thing. 20% means if you're investing 100 rupees today in the market, at least putting 20 rupees in gold ETF is what I'm saying. Anyway, before I do go, Shashwat has a new article out on Substack, which I strongly recommend you read. Title of the article is Paradox of Capitalism, Balancing Free Market and Regulation. It's exploring Adam Smith's legacy, economic cycles, and role of government in sustaining prosperity. It's a macroeconomic article. It is a lovely piece written by Anand and Shashwat. Do read it. I'm sure you'll get a lot of insights on what's going to be happening in our world in the coming few years, especially as Trump swears in as the next president of the United States. Right? Thanks for watching the video. I hope you feel encouraged and you invest on day 246. I'll see you again tomorrow evening as we take stock of our day and get into analyzing what we did. I'll definitely be sharing what I did for the day tomorrow and probably talk about some Indian and American stocks. I'll try and do that in every video where I talk about a few Indian companies and a few American companies, since a lot of you have been asking me to do that. Thanks for watching Be Rich, and I'll see you again tomorrow with another video. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.